Hi there, this is Santian. Today we'll be talking about a company that have been thinking of buying slowly in recent weeks. Despite the huge sell-off in technology stocks, I strongly feel that the stock I'm buying is a great company. Not only does it develop and produce GPUs for gaming and professional markets, but it also produces chips for mobile computing and the automotive market. As the automotive industry moves towards becoming more environmentally sustainable and more vehicles become electric vehicles, more chips are needed in these vehicles. Furthermore, there's a push towards self-driving vehicles. Therefore, there will always be a need for semiconductor chips. The company that I'm talking about is NVDA. Before we continue, please smash the like button. And if you'd like to see more such videos, please subscribe to this channel. Firstly, we'll be talking about the business model of the company. NVDA is an American multinational technology company incorporated in Delaware and based in San Clara, California. It designs GPUs for the gaming and professional markets, as well as systems on chips units for the mobile computing and automotive market. Its primary GPU line, labeled GeForce, is in direct cooperation with GPUs of the Radeon brand by AMD. NVIDIA expands its presence in the gaming industry with its handheld gaming console, Shield Portable, Shield Tablet, and Shield Android TV, and its cloud gaming service GeForce Now. For professional line of GPUs, it is used in workstations for applications in such fields as architects, engineering and construction, media and entertainment, automotive, scientific research, and manufacturing design. Thirdly, we'll be talking about the third quarter of earnings in 2021. NVIDIA stock rose more than 5% in standard trading after it reported earnings for its third fiscal quarter that beat expectations for both earnings and sales. The company also issues a bullish forecast for revenue in the current quarter ending in January. NVIDIA said it expects to report around 7.4 billion in its previous quarter ending in January, higher than analyst expectation of 6.86 billion. NVIDIA stocks has been a big run, with shares up more than 125% last year. The company has had more demand than it can fill, especially for its hard-to-find GeForce graphics cards that are popular with gamers. The company has made significant gains in data centers, where cloud providers and big enterprises are turning to the kind of graphic processors made by NVIDIA for artificial intelligence application. Gaming, NVIDIA's biggest market, reports 3.2 billion in sales, up 42%. From 2.27 billion in the same quarter last year. The company said it was primarily due to increased sales of its GeForce consumer graphic processors, but the company said supplies remain limited. Secondly, we were talking about the FTC suing to block NVIDIA's 40 billion acquisition of ARMS. The deal has faced scrutiny from regulators since it was announced in 2020. The US actions in the biggest hurdle it has faced yet and threatened whether the deal will be completed. The proposed vertical deal will give one of the largest chip companies control over the computing technology and design that rival firms rely on to develop their competing chip, the FTC said in an announcement. ARM is a core supplier of architectural technology to most semiconductor companies. Its ARM instruction set is the core of nearly all mobile processors powering smartphones, including those made by Apple and Android devices that use Qualcomm. But the company's role in the chip industry was historical as a neutral supplier, raising concerns that NVIDIA could cut off competitors from essential ARM technology. Some of NVIDIA's processors also use ARM design cores and its ARM architects, although the company is best known for graphic processors which use different architects. FTC Chair Lina Khan, who was appointed by President Joe Biden to lead the agency shortly after her confirmation to the agency earlier in 2021, has signaled an interest in more robust antitrust enforcement. Khan spent her time as an academic and a congressional staffer before her nomination studying large technology companies and the unique ways these firms can amass power in digital market. Next, we'll be talking about how analysts feel about this acquisition. NVIDIA's $40 billion acquisition of UK chip designer ARMS is looking increasingly unlikely to go through, according to Granite semiconductor analyst Alan Presley. The deal is facing a growing number of regulatory probes around the world, Presley said, pointing to concerns in the UK, the EU, the US, and China. The deal was set to be completed by March 2022, but NVIDIA CEO Jason Huang admitted in August that it will probably go beyond that date. ARM was spun out of an early computing company called Icon Computers in the 1990s. The company's energy-efficient chip designs are used in 95% of the world's smartphones and 95% of the chip design in China. The company bought by Japan SoftBank in 2016 for $24 billion, licensed its chip designs to more than 500 companies who use them to make their semiconductors. Critics are concerned that the merger with NVIDIA to design its chips could restrict access to ARM's neutral semiconductor designs and may lead to higher price, less choice, and reduced innovation in the industry. But NVIDIA argued that the deal will lead to more innovation and that ARMS will benefit from increased investment. Moreover, NVIDIA and ARM fight back as the UK competitor regulator consider blocking the deal. The deal, which is set to miss the deadline of March 2022, is being closely scrutinized by regulators in the US, UK, Europe, and China, who are concerned that it could reduce competition. SoftBank, NVIDIA, and ARM agreed to complete the transaction within 18 months of September 2020. There's a high chance that one or more of the regulators will block the deal altogether, according to Granite analyst Alan Presley and other investors. In a 28-page written submission to UK Competition and Market Authority that was published, the semiconductors heavyweight outlines why the deal should be approved. They accused the deal's critics of womanizing ARM's history, ignoring the company's current financial position, and overstating ARM's current market power. Elsewhere, the FTC sued to block the deal in December on antitrust grounds, while the European Commission, the executive arm of the EU, launched its in-depth investigation into the deal in October. Next, NVIDIA is reporting preparing to abandon its $40 billion takeover of ARM. The US chipmakers have told partners it is not expecting the deal to be finalized, the news agency reported, citing people familiar with the matter. SoftBank, which currently owns ARM, is ramping up preparation for ARM to go public instead of the NVIDIA takeover, according to Bloomberg. The deal has faced scrutiny from regulators around the world who worry it will give NVIDIA an unfair advantage in the semiconductor industry. ARM is often considered the crown jewel in the UK technology industry. Its energy-efficient chip architects are used in 95% of the world's smartphones and 95% of the chips designed in China. The companies make money from royalties paid by manufacturers. Thirdly, we'll be talking about the deals that NVIDIA is finding success in China by riding the country's EV boom. Several Chinese electric car makers are turning to US chip giant NVIDIA to power the semi-autonomous driving system. as they went up competition with Tesla in the world's largest car market. Chinese startups Zipping and New are using the NVDA's drive-oriented chips in the latest car. Baidu, which last year launched an audio unit called Jidu, announced plans to use the same chip in its upcoming car, as well as Polestar, a brand under Chinese auto giant Geely. With these chipsets and accompanying software platform, NVIDIA promised the capability for fully autonomous driving. However, these Chinese car makers are not putting out fully autonomous cars. Instead, they are focusing on the so-called advanced driver assistance system. These are systems that allow the car to carry out some functions semi-autonomously, such as lane switching. For example, Tesla ADAS is called Autopilot, while CP system is called X-Pilot. Next, we'll be looking at the fourth quarter of the company. NVIDIA said it expects to report revenue of $8.1 billion in the first quarter, higher than annual expectation of $7.29 billion. NVIDIA CEO Jason Huang said in a statement that the company is seeing exceptional demand because its chips are useful for AI and other intensive applications. Huang also said NVIDIA's supply constraints were easing and that the company's supply of products will eventually increase substantially in the second half of this year. NVIDIA stocks rallied in 2021 but is down so far this year as investors are looking for safer investment in an inflationary environment. NVIDIA has gotten a boost as cloud providers and enterprise turn to its graphics processors that are used for AI applications like speech recognition and recommendation. NVIDIA reported $3.26 billion in sales from its data science business, up 7% annually. Its chips are also being used by business for applications like computer assist design and rendering. It reports those sales in professional visualization business, which rose 109%. The company said the growth was driven by workstation chip sales and hybrid working. Finally, we'll be looking at the recent quarter of the company. NVIDIA will slow down its hiring pace and control expense as the company deals with a challenging macroeconomic environment. Its CFO, Clarice Karras, said after the company reported physical first quarter earnings. NVIDIA beats annual expectation for both sales and earnings, but its stock drops more than 10% in extended trading after the chipmaker gave a light forecast for the current quarter. NVIDIA says revenue for the current quarter will be around $8.1 billion, under annual expectation of $8.54 billion. NVIDIA stock is down over 43% so far in 2022 as investors shun fast-growing stocks in favor of safer bets during a period of high inflation and macroeconomic uncertainty. NVIDIA says its revenue in its current quarter will be $500 million, lower than it would have been if not for the Russian war in Ukraine and COVID lockdown in China. NVIDIA data center business, which sells chips for cloud computing companies and enterprise, grew 83% annually, surpassing the company's core gaming business, which sells graphic cards for playing advanced 3D games, which grew 31%. NVIDIA said it bought had authorized an additional $15 billion in share buybacks through the end of next year. It spent $2.1 billion on share buybacks and dividends in the first quarter. In conclusion, I strongly believe that NVIDIA is a great company to be in no matter how the pandemic involves. If countries manage to resolve the supply chain and port issues, NVIDIA could start to participate in the EV market. However, if the pandemic continues to persist, many people will stay at home and purchase more computers. This will be a great boost to the company. Moreover, the company is also benefiting from rise in cloud computing. However, due to the current trend, I decided to keep this company on my watch list instead of purchasing. With that, have a nice day. Goodbye.